I just looked up on ChatGPT. Give me examples of words for periods without any action that is temporary, because I was trying to come up with a clever way to say we're in a holding pattern, Tom. Especially in the United States, we are waiting for more information. Was Q1 inflation temporary? Where will jobs go? The balance of risks is that jobs deteriorate from this moment forward, but we got to get that June, July, August data. The Fed is not going to be cutting before September. But we need more information. And so week to week, it's bits and bobs on the U.S. economy. Now, that's true for the U.S. It's not true elsewhere. We had a big PCE number this morning in the U.S. We're not talking about that on our team over at Manulife. We're talking about intervention in Japan. Might seem small, huge downward revision on Canadian GDP. Canada escaped a recession by a decimal point in Q3, Q4. We have the ECB cutting next week, the BOC cutting next week. There's a lot of movement in the world, but not so much in the U.S. I think that's the more interesting macro picture now.
We're getting onto a late jobs report, June 7. The survey's still 180,000. I'm sorry, Francis, 180,000 non-farm payrolls is still maybe not robust, but I'm going to borrow from Bob Sinch, a solid American economy?
Yeah, it's not a problem. Not a problem. And this is the big issue facing the Fed, is that the balance of risks is tilting towards an acceleration of weakness in the U.S., but inflation is still above target and the job market has not deteriorated. We like to say on our team, when the Fed starts cutting rates, you won't be asking why. If the Fed cut rate in the next 2 months, we'd all be shaking our heads saying why. So they just don't have the data. Now, that said, when we forecast what's ahead, we think they will have enough data by September, but they don't have it now, which is why they can't cut in June, July, and they have to wait.
You talked about the B of E cutting rates, the European Central Bank cutting rates soon. I mean, a lot of folks out there, Francis, would say, my Federal Reserve is behind the curve here. They should be cutting now. What do you say to those folks?
Well, I say this is actually very atypical, and I think that's what's causing problems. Historically, the Fed goes first, everybody else follows, EMs go last. The cycle has been so fundamentally different. EMs are almost done their cutting cycle. We have several developed markets who are cutting ahead of the Fed. I think this is actually creating some problems, and I was talking to my team today. We're so used to saying the Fed only cares about what's happening domestically, and the Fed is the ruler of all other central banks. But the Fed is also going to care about some of the global disruptions that is coming from them being last or near last. We've got the RBA and the BOJ, of course, that are still on the hawkish glance. And so the number one question that I get is, what are we doing with currency risk in countries that need to cut rates because their economy is weakening but can't diverge too substantially from the Fed? So I think we might see some subtle, or I'd like to see some subtle references from the Fed of some of the chaos that's being created by the Fed going later. At the end of the day, though, these central banks have their own domestic mandates. The Fed doesn't have justification to cut. These other central banks that are cutting absolutely have to get on the ball, or else they're going to risk bigger recessions and potentially larger rate divergences.